Okay, so guys, we're gonna talk about order blocks. Okay, so I'm gonna start with the website, and that order blocks are, first of all, are 2 candles. Okay, a lot of people thought it was 1. So this candle plus this candle is the order block. Yes, we're only doing 50% of the shorter candle, but this is our scenario that we want to look for. Okay, we want to look for an engulfing candle that engulfs. So the shorter candle, then we get the big long candle. So that's what engulfing means. And then the price just falls down. Okay, so if I'm taking notes, 2 candles, a short candle and a long candle, or you can get 2 candles that are both long, minimal wick, and the key is the price falls after, either shoots up or falls, like selling climax, buy climax, right? If we get it staying and like giving us dojis that wick into 50%, it's not an order block that you guys can use where price will come back to. Okay, so now when price does come back to these order blocks, it comes back to 50% of the shorter one, body to body. So that's all the order blocks that are on the chart gallery. So you guys know I like to draw up my little, I don't know what they're called, illustrations. Let me screenshot this. Let's mark it up actually. So order block 50% of this candle, stop loss above the body or the wick, depending on what your risk to reward is really doing for you. So guys, your candles are going to be black and white. Your stop loss is going to be red, entry black, take profit green, nothing more, nothing less. Whatever equal lows that are created either before something you would have, let's pretend these were actual candles that were equal lows. And I'm going to start my line at the equal lows of the candles. Okay. So this is literally what it's going to look like, guys. Very easy stuff. Like zoomed in. Stop loss exactly on the red line, exactly on the green line, nothing more, nothing less. Do you refine order block on smaller time frame? No. You guys, so when I tell you guys to look for the picture, if the picture is on the 1 hour, then I'm looking at the 1 hour and I'm looking for the entry on the 1 hour. Lower time frame is not brand new information. It's literally the same candlestick, just zoomed in. There's no refine. It's 50% of the order block stop loss above the high. That's it. And this may line up with imbalance on smaller time frame, but it's the same thing. Especially with order blocks, you're pretty much going to get the exact same scenario, but you're not going to get an order block. Like this is not going to show up as an order block on any other time frame. So we'll do that in real time. We'll look at the time frames. Okay, but for now, this is what you're going to get. Okay, so I did all mine on UJ. Guys, the same thing happens on the same time frames all the time. What is this line? Happen on same pairs, different time frames, happen on different time frames, happens all the time. There's no, oh, there's order blocks happening here, but not here. No. So if you're new here, there's no such thing as don't trade on Sundays, don't trade on Fridays. There's no order blocks here. The market moves at this time. You just probably don't know how to do certain things at certain times on certain pairs. But the reason why that is because you haven't back tested it. I'm pretty sure if I go back test any pair you guys drop right now, I can find 57 order blocks between now and since the market was created on tradingview.com. So if you're having trouble finding something, it's because you haven't put in enough work to back test it to be able to find it in real time. So let's start with the first one here. I'm gonna go here. It's an imbalance, so I know that was in the time frame. Let's use my replay to make it easier. Okay, UJ on the 4 hour, huge order block. UJ does give really clean order blocks, I must admit, on the higher time frames. Order block, 50% of the smaller candle, which would be this one in this case. Tap and go, stop loss above the high. You're still in the trade. This one, you may have to refine. Let's see, no, I lied. Sorry, you guys can't see. Hold up. I feel like I don't have enough screen with TradingView anymore. Why do I have two, like, oh, that's because replay mode. Okay. So stop loss to entry is, you have a 6.1, you have a 7 pip stop loss. That's all you need. If you're on the right side of the trade, the market's not going to go above an order block. Sometimes, like, 20% of the time it just does for absolutely no reason that you could predict. But I'd rather get stopped out 20% of the time than have a 20 pip stop loss 90% of the time. Any questions about this? Okay, let's see on a different time frame. We went to the 1 hour. The 1 hour, it looked like this. The first wick did hit, the second wick did come up a little bit. So even if you call this imbalance, you still would have been in here nice with a nice stop. Super clean, not rocket science, pretty simple. Let's just walk it down for fun. Let's see what the daily. So daily was a wick. That'd be helpful for us. This is the entry. So if you would have won 30, you wouldn't have gotten filled. 15, you wouldn't have gotten filled. 5, you wouldn't have gotten filled, right? Because we would have filled it at the full fill, the full gap. Okay. So this is the order block. So when people ask me, well, which time frame should we use? Well, which one has the prettiest picture, guys? Imbalance is the same thing. It's usually imbalance and it just sells off. Is this a sell-off or is this a wiki situation with dojis? It's a pretty picture. Now, people always ask me, do we use limits or market entry? There's no difference between entering by market and entering limit. If you're literally entering the trade, like entering the trade has nothing to do with the trade itself. If I sell by market right here and I put a limit right here, there's zero difference. Okay, so the only difference between limits and market order is one, market order, you have to set an alert early and then watch it go here. And if you have that, well, then you get to watch the candle and execute when the candle closes. Now, if you execute when the candle closes, then your stop loss might move, right? If we get, like I said, guys, if I enter this trade by limit order or by market, doesn't matter if as long as I click the sell button, right? Does it matter? Not really. The only difference is if you use a market and you wait for the candle close, yes, you can go on lower time frames if you want to just see what that would look like. But then you just have to use your stop loss above whatever high. So maybe you have a 7 pip here or like an 8 because then it did come back up. So just kind of refine your stop loss a little bit, but nothing crazy. It's not like you'd have to use a 20 pip stop. On UJ on the 4 hour, obviously, if you waited for it to close all the way down here, you are working with a 20 pip stop, right? If you entered here, you're probably working with a 10, which is still fine. If you want to use a limit, you can use a limit. If you're, as long as you're confident in, your setup, you're going to bed. Or the good thing about limit is that you get precise entry if you just want to execute at the right time, right? Because sometimes you get to your alert and then you blink and then it's like, took away from you like a tad bit, right? Right. So make sure you guys are only focusing on what's important. Enter the trade, the candlestick at 50%. Use a limit, use market execution when it gets here, right? Because these candles is the same candles as on the 15. So I'm going to go to my other example. Okay, so I have this line here for something. Let me remember why.